SpaceX is headed for the public markets in what could be the biggest IPO in Wall Street history. The company's S1 registration just dropped, so let's take a look at the numbers. Founded in 2002, SpaceX, the business, is made up of three segments: space, connectivity, and AI. The space segment provides launch services which allow private and government organizations to launch payloads and satellite constellations. NASA is the biggest customer here, and there have been over 650 launches since 2002. The segment is very much the backbone of SpaceX. It generated $4 billion of revenue last year, but it's not profitable, with an operating loss of $657 million and capital expenditures of $3.8 billion. Next is the connectivity segment, which includes Starlink and provides broadband internet via satellite to over 10 million subscribers. This is the most profitable segment for SpaceX. In 2025, the segment generated $11.4 billion of revenue and an operating profit of $4.4 billion, with capital expenditures of $4.2 billion. The third segment is XAI, which was born out of the acquisition of Twitter in 2022. XAI has since transformed into a social media and AI infrastructure giant. Musk has built two of the largest AI data training centers in the world, Colossus 1 and Colossus 2, which run hundreds of thousands of GPUs and provide AI compute to large enterprises like Anthropic as well as X's own Grok. But this segment is currently the least profitable. In 2025, XAI generated just $3.2 billion of revenue, with an operating loss of $6.3 billion and capital expenditures of $12.7 billion. However, the S1 reports that Anthropic recently agreed to pay XAI $1.25 billion a month, so XAI's revenue is set to ramp meaningfully this year. Putting all the parts together, you can see that 2025 revenue for SpaceX as a whole was $18.7 billion, which was up 33% on the year before. But total operating costs came to $21.2 billion. Add interest expenses and some additional costs, and the total net profit for 2025 was negative $4.9 billion. So SpaceX is currently not that close to being a profitable business. Other notable items in the S1 include the balance sheet, which shows $15.9 billion of cash and equivalents and $29 billion of long-term debt, and the free cash flow statement, which reveals negative free cash flow of $14 billion. However, SpaceX does report a positive adjusted EBITDA figure of $6.6 billion in its S1 by adding back costs like depreciation, stock-based compensation, and interest. So, considering SpaceX is predicted to IPO at a valuation around $1.75 trillion, you can see that the company will be valued at around 94 times revenue or 265 times adjusted EBITDA. That looks wildly overvalued, but there are some nuances to consider, because SpaceX is clearly a special business with goals that go far beyond the realms of most other companies. Indeed, the S1 for SpaceX projects numerous growth opportunities and a total addressable market of $28.5 trillion. That's not far off the annual GDP of the United States. Meanwhile, Nasdaq's fast entry rule changes, which are intended to support large companies with small floats, means that the SpaceX IPO could go off with a bang, even if the stock looks overpriced on the day. Even so, SpaceX is unlikely to become profitable anytime soon due to the company's huge investment needs. Launching rockets, replacing satellites, and building data centers in space, that's all going to cost the company a fortune. Ultimately, this is another hot IPO that's best to watch from the sidelines. But these are my personal opinions, not financial advice. For more investing ideas, make sure to join my newsletter and Discord at overlookedalpha.com. Thank you for watching.